for people to file in here. Thank you all for joining us. We'll give it just 30 more seconds here. Okay. Thank you all so much for joining us. I'm going to share my screen here as we start to get into it. Here we go. It's really a pleasure to have guests here from all over the world to discuss what the implications are of the Russian invasion of Ukraine on global liquefied natural gas markets. My name is Sam Reynolds. I'm an energy finance analyst here with IEEFA, and we're going to be focusing today on what the implications are for demand markets, particularly in Europe and Asia, as well as what some of the impacts are on the supply side, focusing in on the United States. And I'm joined by my colleagues, Clark Williams-Derry, Arjun, Flora, and Jaller-Makarewicz. And I just want to first start by saying again, thank you, and feel free to leave your questions, drop your questions in the Q&A there. So I want to first start by just talking about why this is important, why the crisis has such a big impact on energy markets around the world. And it's because Russia is the single largest natural gas exporter worldwide. It accounts for more than a third of European gas supply. It's the second largest natural gas producer, the third largest oil producer, and the sixth largest coal producer. That means that any geopolitical disruption, or more importantly, any fear or perceived risk of continued disruption to those supplies, can have major impacts on price volatility in global commodity markets, as well as fuel supply insecurity in fossil fuel importing markets. And we're already seeing some of those disruptions start to play out in Europe. The dark red line on the left chart shows pipeline imports from Russia into Europe have fallen well below what the 5-year range indicated by that dotted gray line is showing. Following the Russian invasion, the EU drafted a very ambitious plan to cut Russian gas dependence by 2/3 by the end of the year. And most of that cut would come from replacing Russian pipe supplies with imported liquefied natural gas, or LNG, from elsewhere in the world, specifically about 50 billion cubic meters of additional LNG supply. And the question on everyone's mind then is, well, where is that LNG going to come from? And so if we look at who's buying LNG historically, we can see that Asian players dominate the market, right? China, Japan, South Korea, India, Taiwan have all historically played very large roles, followed by much smaller shares from European countries, Spain, France, and the UK. And what an important point I want to note here is that really prices are the ones determining destination. Prices are directing traffic. And so we see the European spot price, indicated by the bright blue line, has tended to be below what Asian buyers are paying, right? That Asian spot price indicated in dark blue. Europe has had other sources of gas from elsewhere, Russian pipeline imports, domestic supply. It hasn't had to compete directly on price with Asian buyers. And as a result, a lot of cargoes have gone to Asia. But since the crisis broke out and since Europe's new LNG buying targets, we can see that spread between the regional prices start to shift. The green line shows TTF, the tidal transfer facility, the European spot benchmark, has tended to be higher over the past several months, for a sustained period than the Asian spot price. And the effect of that is quite clear, right? Whereas in 2021, almost half of US volumes were going to Asia. In March 24th, 2022, this shows a map of laden cargoes from the United States. It's very plain to see where most cargoes are headed. And so with limited new LNG supply capacity expected online until about the middle of the decade, 2026, many expect the market to remain tight, and Europe will have to continue to outcompete Asian buyers on price. And so just talking quickly about what the response has been from Asia, we've seen a lot of Asian buyers really unwilling to pay these higher prices, right? Buyers have exited the spot markets kind of en masse. China, Japan, India, Bangladesh, and others kind of resisting to pay these prices when they don't have to. And that reduction is particularly stark in China, where demand for LNG has fallen 16% year to date. Now, a large part of that is certainly due to the resurgence of COVID and the resulting lockdowns. But at the same time, pipeline gas imports into China are up in the early part of the year, specifically from Russia. They're up 60% through the Power of Siberia pipeline, with plans to expand pipeline capacity with Russia significantly. We've also seen a new hydrogen strategy out of China. And so we are really starting to see potentially permanent moves away from reliance on volatile, expensive global LNG markets. In Japan and Korea, the picture is mixed. Japanese LNG demand down 5% year to date, South Korean demand up 3%. A lot of people expect this buying activity in these countries to pick up as we approach the winter heating season. But long-term plans, particularly in Japan, suggest that there is an ongoing shift away from LNG, right? This is the chart on the right shows a draft energy plan from Japan, which indicates that the percent of LNG in the power mix could fall from 37% to 20% to 2030. And this kind of aligns with industry outlooks. This is Shell's LNG Industry Outlook to 2040. We see that Northeast Asian demand is actually expected to decline over the next 2 decades, right? The real sources of growth for the industry are in Southeast Asia and South Asia. Now, that said, a lot of this potential demand growth depends on the region, this developing Asia's ability to afford and to pay for higher priced LNG imports. If we look at what they're used to paying, we can see that domestic gas prices of domestically produced gas in developing Asia have been in the $1 to $5 per million British thermal unit range. We're talking orders of magnitude less than what recent LNG prices are showing. And we've already seen buyers crowded out of the market because of higher prices, particularly Pakistan, Bangladesh, India. In Bangladesh, we're seeing gas to oil switching. In Pakistan, we're seeing an inability to source cargoes. So many suppliers are defaulting and shifting cargoes from Pakistan to higher priced markets elsewhere. And the same picture in India, we've seen a potentially ramp up of domestic coal and gas production to compensate for unaffordable imports. And the last point that I really want to just emphasize here is that these buyers may continue to be crowded out of the market given the crisis and given Europe's new buying strategy. If we take that 50 billion cubic meter target I mentioned, here I've converted it to 36 million tons, and we can see how it stacks up against LNG demand in 2021 from emerging Asian buyers, right? These markets represent about 2.2 billion people that could be potentially squeezed out of the LNG markets because of greater interregional competition between Europe and Northeast Asia. And so really, we're talking about a stark risk of energy insecurity in these emerging Asian countries, a very large risk of stranded asset risk for gas infrastructure. And ultimately, these price spikes and these supply disruptions are undermining the economic case for LNG in the region. And this could ultimately hurt the growth of the industry in what was expected to be the largest growth region worldwide. And so I'm going to stop there. I'm going to hand it off to my colleague, Arjun, Flora. Thank you very much. And please feel free to leave questions in the chat, in the Q&A. Thank you.
Thanks so much, Sam. I'll just try and share my screen here. Can everybody see that? That's okay. Great. So hi, I'm Arjun. I'm Director Energy Finance Studies Europe for IEEFA. As we have an international audience on the call today, I thought I'd spend 10 minutes just kind of outlining and giving some context and some background on the European system. And then I'll hand over to my colleague in Europe, Anna Maria. Okay, so to start with, just taking a look back at the last decade, I think it's important to note that European gas demand has not been growing. So it's been flat, reducing slightly, but indigenous production has been decreasing. And this is why we've seen an increased reliance on imports. So in 2020, for example, about 80% of gas consumption in the EU plus UK was from imports. And Russia has always been a major supplier. I mean, Europe, so you can see in the top chart, that's the red bar at the bottom, and it's been growing. So what's gas used for in Europe? It's used for power generation. It's used in buildings, mainly for heating, but also cooking. And it's also used in industry as a fuel and also as a feedstock. So that's the overall picture. But as usual, it's quite complex. So of 27 countries in the European Union, there's a wide range of dependency on Russian gas imports. So this chart's a few years old, but still it shows quite clearly how large the spread is. You've got some countries almost 100% dependent on Russian gas, others not very dependent at all. Just to add another layer of complexity, gas is much more important to some countries than it is to others. So this is a chart. I've included a link. It's quite a nice interactive chart actually, but it shows how much each of these countries depend on gas for their total, what's called gross inland energy consumption. So on one hand, you've got countries like Italy and the Netherlands that are up around 40%. And on the other hand, you've got Cyprus, Sweden, Finland, Estonia, less than 10% reliance on gas. So even though the average, the European Union average is around 25, you can see there's a big spread. Why is this important? Well, this makes it tricky for coordinated responses to what's happened in Ukraine. We've seen this. It's a similar story for coal and for oil. It's why it's been so difficult for the EU for Europe to place embargoes on these imports. Okay, so talking about prices. As I'm sure all of you know, gas prices have been at record highs since the second half of last year, caused by a whole bunch of factors, but definitely a major factor has been reduced supplies from Russia. So here a couple of charts just showing some pricing for June 2020 contract, Dutch TTF and UK net balancing point. You can see how much the prices have grown and how volatile that pricing has become. It's caused widespread disruption. Europe is very exposed to this volatility because the contracts are very much linked to these spot prices nowadays. So although that was good a couple of years ago, now Europe's very exposed. So we've seen a whole bunch of disruption, fertilizer plants being curtailed. We've seen mass power sector switching away from gas, and we've seen governments intervening to reduce, to try and cushion the impact of this pricing on industry and also on the most vulnerable consumers. But just I think the key point here is this really demonstrates that Russia's really weaponized Europe's dependency on Russian gas, and this is now forced Europe to get serious about diversifying. So this has not been new, this idea to diversify away from Russian gas. It's been talked about for a long time, but it hasn't happened. Even there was the Russian annexation of Crimea in 2014. You can see on the chart, dependence on Russian imports has still grown. Why has that happened? Well, a whole bunch of factors. You could say political complacency or lack of will, cost. Russian pipe gas is cheap. But one factor which I don't think is talked about enough outside Europe, especially, is the way the network is planned in Europe. And really, this process is dominated by vested interest groups, by gas infrastructure companies. And so there's been a lack of overall oversight and independent planning for the European network. So I'd like to just spend a couple of slides talking about these companies. So introducing the European Network of Transmission System Operators for Gas, ENTSOG or ENTSOG, through regulation called 10E, they are given a lot of responsibility for planning and proposing infrastructure projects across the EU. They're nationally regulated, often private monopolies. They wield huge political influence, and they receive guaranteed returns for infrastructure investments. So basically, the takeaway from all of that is that there's been a massive conflict of interest here when it comes to planning the network. And these companies together, I've included some logos there on the right. It's essentially lobby groups which they're all part of. That they're a big part of the push for hydrogen in Europe as well. So coming back to their business models, they are remunerated through a regulated asset base business model, which basically means the more they can spend and justify spending on infrastructure, the more they will get paid. And that's very much de-risked. It doesn't matter how much the pipeline is used or the terminal is used, they will be compensated for that. So there are two main results for this, as our reports have shown repeatedly through specific examples. One is the overbuild of infrastructure in the wrong places. So we're seeing that now. Anna Maria will talk more about flows, but gas is unable to get to where it needs to get to a lot of the time. And the second is they've been involved in lobbying for more infrastructure going forwards around gaseous fuels. So coming back to today in Ukraine, yesterday, President von der Leyen announced Repower EU, which had already been publicized a bit back in March. So this is a whole bunch of different measures and a whole package of solutions to try and get Europe off Russian gas and to accelerate the energy transition. It focuses around energy savings, accelerating, as I said, the clean energy transition, and diversifying energy sources. I think a few takeaways I'd mentioned, although we're still digesting all of it. One is that the joint purchasing of gas should help to improve, to enable Europe to secure short-term gas supplies. Two is the transparent sharing of gas storage capacities. This is really important, plus a requirement that they're prepared for winter, so they fill the storages before November. And also, I think it's important to note that even though short-term there is this large demand for LNG as Europe pulls away from Russian pipeline gas, in the medium term, gas demand will go down. I also just wanted to highlight that there is a risk around hydrogen and the continued model we have for planning networks in Europe. Okay, thanks. I'm not sure if I have time actually for a recap. I think I may have gone over, but I'll just skip this and just hand over now to Anna Maria. Oh, you're on mute, Anna Maria.
Hello, yes. Am I okay now? Yeah. Hi, thanks, Arjun. Yes, I'm pleased to be here. I'm going to talk to you a little bit about the Europe dependency on Russian gas. And to understand this, we need to talk a little bit about the history, about the planning of the pipelines in Europe. More than 30, 40 years ago, all the pipelines that were bringing gas to Europe were crossing Ukraine. There was a set of pipelines called the Brotherhood that were built from Russia up to Western Europe. Then came the Trans-Balkan that was bringing Russian gas up to Bulgaria. But from 2003 onwards, what happened that lots of other pipelines that were coming into operation were bypassing that route. We have, for example, Blue Stream, Yamal, Nord Stream, Turk Stream. Blue Stream goes directly to Turkey via Black Sea. Yamal goes Belarus, Poland to Germany. Nord Stream through the Baltic Sea directly to Germany, and the Turk Stream directly to Turkey via the Black Sea. And what we have seen that the transiting through Ukraine has been declining, actually around 100 BCM in 20 years. So all this is showing that Europe all this time has been wondering how to diversify the routes, but actually we were bringing the same source of gas all the time. It was just in a different way, in a different pipeline. Then suddenly on the 24th of February, Russia invaded Ukraine. So we can see here in the graphic, all the flows via Yamal, Ukraine, Nord Stream, and the third stream through Bulgaria. What happened here, that there was an increase, even though we had this on the 24th of February, still in March, there was a lot of Russian gas coming into Europe. Actually, there was an increase of the 28%. And we saw other increases in flows into Europe from UK, from Libya, from Azerbaijan, from LNG, Norway, and Algeria. Then on the 27th of April, Russia cut Poland and Bulgaria off from its gas. And we see here in the gray part at the bottom that that day, the flow through Yamal stopped. But how are Poland and Bulgaria coping without this Russian gas? We have on one hand Poland, that they used to import around 10 BCM from Russia. So the Yamal pipeline started increasing flows eastwards from Germany to Poland, instead of usually Poland to Germany. So that was started bringing more gas to Poland. The LNG terminal is working actually even more than 100% capacity. And they have been really wise on the storage part. At that moment, it was around 79%. And actually, I checked today, and it's 90% of the capacity. So that I think, if I'm not wrong, is the only country with this high percentage of capacity in Europe. On the other hand, we have Bulgaria, that they were importing around only 3 BCM from Russia, but still it's important for them. They have some flows coming from Azerbaijan, and they are in talks to bring some LNG deliveries via Turkey and Greece. This could help them too. So we see this problem that is happening, but on the other hand, we see that Europe still helps Russian gas. We have this case of Zeebrugge, for example, that is an important hub of Russian LNG to the rest of the world. But it's not only Zeebrugge, there are other LNG terminals on the northern part of Europe that also serve as transshipment hubs for Zeebrugge, for Yamal LNG. So here, in 2019, there was a 20-year contract between Fluxys and Yamal to bring icebreaker LNG carriers from Sabeta and Yamal to be transshipped. Transshipped means sending LNG, transshipping LNG from one ship to the other, or like in Zeebrugge can be also done, ship, storage, ship, because they build a storage tank specifically for this contract. And when they are changing from these icebreaker LNG carriers, they are changed into conventional LNG carriers that send gas, LNG, to the rest of the world. For example, in January and February this year, 5 of the 8 cargoes that were exporting Yamal LNG transshipped at Zeebrugge, and 7 of 8 of them were sent to the rest of the world. So we see that still is happening. Still, Zeebrugge and other LNG terminals in Europe are serving as transshipment hubs for Russia, even though the problems we are still having with them. And not only the transshipment. What did we see in April 2022? LNG imports. LNG terminals were built to diversify energy sources. We were bringing lots of pipe gas from Poland, so the LNG should bring gas from other parts of the world. But no, it's not the case. For example, Belgium last month, actually, from the LNG import, 44% came from Russia. France, 18%. Netherlands, 24%. And Spain, 11%. So still, we haven't changed the way we operate LNG really in relation to Russia here in Europe. So when we analyze all the things, I saw a very wise quote this week at the Financial Times, where we said, okay, what do we need to do with all what is happening right now in Europe? And we said we should stop and do an analysis. What infrastructures do we have? What can be used more and improved instead of going crazy building? Because right now we are seeing a lot of desperation. You know, we need to tackle what is happening, this crisis in Europe. Let's just build. No, let's just stop it for a moment and analyze if we really need that investment. And we have seen so far that there has been a lack of planning as a whole continent together. And for the planning, what do we need first moment? To check the demand. As already Arjun said before, the demand hasn't been growing. We see, for example, the demand for the last 20 years has been steady in Europe. And the forecast of demand is going to fall. And there are some scenarios already that INSOC studied before in different cases. And all of them were saying by 2030, 2050, the demand of gas is going to be reduced. And yesterday with the EU plans that they came up with, the Repower EU, with all these new measures, most probably that demand is going to reduce even lower. So this is when we as IEEFA tell we have to analyze. Is there going to be the demand for that infrastructure? We did a study last year about Spain, and I was amazed to realize that there are so many pipelines there, that all the pipelines, they were not built in conjunction with analyzing the demand. There's no demand for that LNG. So now I've heard like, oh, there's a bottleneck between Spain and France. But then I asked the other question. There's no bottleneck. It's that there's too much LNG coming, that there's no way to come out to send it to anywhere in Europe. So less than 50% actually of the installed capacity in Spain is used or has been even used for the last 10 years. So that is our worry that we want to plot here. Like, you know, we really need to build whatever is need to be done to be built in the future in alignment with the demand, and analyzing also where is the spare capacity that we have and where there will be some increment in flows that we could have in certain pipelines, for example. Or we could think on redirecting flows. We have seen, but let's see, for example, when we talk about spare capacity. So we realize, okay, what happened with the LNG terminals this year in 2022? Definitely, there has been a big growth there. When we compare between 2020, 2021 to 2022. And in the 4 months of this year, they have been on average utilized at 70%. So definitely there's a big opportunity there. And the biggest importers are France, Spain, Turkey, and the UK. They have been, most of the time, they have more capacity actually to be able to import more LNG. But then the interesting part of this is that even though the LNG imports have been growing, there's still spare capacity. As we can see it in Turkey, Greece, Spain, UK, Portugal. So let's analyze this first. For example, Spain right now has 56%. So even now that we're in a crisis, that Spain is importing much more LNG than before, still there is 44% spare capacity without counting El Musel. That is a mouthful LNG terminal that was built and had to be closed immediately. So that is the message we want to send. Analyze the spare capacity in Europe before investing on anything else. And then also analyze the gas network. We have to understand how the network operates in Europe. Here, this could be a complicated map, but we try to simplify as such an interconnected network that Europe is, to try to visualize all those points where we could increase volumes, where we could maybe change the direction of the flows, because maybe we can analyze how to operate in a better way our network. We can see, for example, around all the countries, these are the LNG terminals. Portugal has one LNG terminal. Spain has all these LNG terminals, 7 here. We have 2 at the bottom in France and 2 at the top. We have a few here in Italy. We have in Croatia, in Greece. There are some of them, a few of them in Turkey that are not all used. There's a great opportunity there in Turkey. We have some LNG terminals here in Lithuania, in Poland, also in the Netherlands, in Belgium, and in the UK. Then there's gas coming to Europe through different pipelines. We have Algeria. Algeria sent gas to Europe through Spain. One was through Morocco, and the other one is directly through Spain. Due to some issues, geopolitical issues between Algeria and Morocco, this pipeline is actually not flowing any gas. And there were some issues lately because Spain wanted to change the direction of the flow and send gas from Spain to Morocco because Morocco is needing that gas. And there have been some issues with Algeria to allow that or not. So there are some geopolitical issues in that part of the world that is affecting also the flows into Spain. Algeria also export through Tunisia to Italy. We have the Transmed pipeline. And there's spare capacity there. We have the Libya pipeline to Italy. There's spare capacity. Now, another thing is to see if there's enough production. Then we have Azerbaijan that is bringing gas to Europe through Turkey, Greece, Albania, and Italy. The Norway and the UK to the northern Europe. And as we all know, Russia, that is dominating all this part in the Western Europe. So it sends both by onshore and also by the sea through the up to Germany. See here we try to show where are those pipelines bi-directional, because that's what we have seen. Not all the flows can flow in the same quantity and in the same direction. So we have to show also which pipelines can flow and what is the capacity of each pipelines. And then, for example, it's just an example. If we see the gas flows, the first quarter of 2022, we can see how the rate from Russia comes even up to Belgium. The Azerbaijan up to Italy and a little bit to Bulgaria. Then we have Spain from Algeria and from Libya, from the UK, from Norway, and also the LNG. So we can still see that Russia was the biggest exporter of pipe gas, and on the 30% of LNG, also there's Russian gas included there. So there's even more Russian gas coming into Europe. And there's also the 2% that is the internal EU production into the other European countries. So, okay, that's all for me. Thank you very much. And now I let Clark continue with this presentation. Many thanks.
Great, thank you, Ana Maria. I'm going to be, I guess, the last speaker talking about the major supply market for Europe now for the LNG, the United States. As many of the folks on this call may know, the US is the largest gas producer in the world and has been since about 2011. Its gas production has been growing during the fracking boom. And so all that gas has to go somewhere. There's a lot of it goes to the electricity sector. A growing share goes to electricity, replacing coal in the US generation mix. But also, a lot of our gas is going now to export, first as pipeline exports to Mexico and to Canada, but since 2016, increasingly as LNG shipped abroad. Now, one of the factors that underpinned the growth of the US LNG industry over the past 6 years has been destination flexibility, that the US, unlike some parts of the world, has a lot of destination flexibility. Basically, LNG can be shipped anywhere in the world to the highest bidder. That's true for the uncontracted capacity in red that's maintained or held back by the LNG companies themselves, but also for the gas that is sold under contract to gas traders, major global gas traders like BP and Shell and Total and Trafigura. Basically, for the yellow and red portions of this chart, there is no destination restriction. And even some, at this point, some Asian buyers are getting into the act of shipping gas globally, taking delivery of US cargoes and shipping it to the highest bidder. This destination flexibility during the Ukraine crisis has allowed the US to provide a huge boost in exports to Europe. Already in year-to-date in 2022, the first 4.5 months, we've seen more LNG from the US shipped to Europe than was shipped in all of 2021. And in fact, if the pace at the beginning of this year continues, we're likely to see roughly a 50 BCM, billion cubic meter boost in US LNG shipments to Europe, just using existing infrastructure and infrastructure that was planned and under construction before the Ukraine crisis. Now, it's important to note that what this means is not that we're producing more LNG. We are producing a little bit more, but a lot of this shift to Europe is at the expense of customers in Asia, as Sam pointed out. In both developed Asia and in developing Asia, those cargoes have been redirected from Asia to Europe. And although there's a lot of talk about, essentially the US supporting its European allies during the crisis, it's really prices rather than politics that are directing traffic in the US LNG market. It's just become a lot more profitable to ship US LNG to Europe because prices are higher and they're willing to buy more and spend more. So for all the talk of helping our European allies during this time of crisis, really is a matter of profit for shipments. Now that hasn't prevented politicians from getting involved in the LNG discussion. We saw towards the end of March that the White House and EU leaders came together to announce targets for new US LNG shipments to Europe. The short-term target for this year was 15 BCM additional, which frankly, the US is on track to blow through by July or August. And that was already clear at the time that that announcement was made. It's essentially politicians announcing something that was already going to happen based on market forces alone. But if you read the fine print of that announcement between the White House and the EU, the yellow section down to the bottom here really tells the story. Europe was not just looking for a more supply, is also looking for a price break. I mean, prices have been so high that I take this as essentially European leaders asking the European super majors, BP, Shell, and Total, for example, to give them Henry Hub index contracts in exchange for stable demand through 2030. So really, when you look at the substance of what this announcement meant, it was not so much a plea for more supply. It was probably more importantly a plea for lower prices or more stable prices, because that has been really the problem, the thing that has been affecting Europe the most. Another political idea that gets floated around is that the US has somehow slowed down the development of LNG terminals. That is really essentially the fault of the current administration, that we're not building more and more LNG terminals. This isn't actually true. First of all, if we're to try to start building new terminals now to service European demand, it wouldn't be before 2025 or 2026 that those terminals would come into service. But more importantly, there have already been a lot of LNG terminals that have gotten their federal permits that are waiting to move forward, but it has been investors that have been standing by the sidelines. It is not that the US has slowed down permitting or they need to speed up permitting. There are a lot of fully permitted facilities that investors have not decided to move forward with because they're looking at the same trends that we are. They're seeing weak demand growth in Asia. They're seeing price volatility. They're seeing long-term demand from Europe decline. And so investors have been standing on the sidelines waiting for more certainty. Now we are starting to see that certainty flow in. We are seeing more new LNG contracts signed with new US LNG facilities. The interesting thing here, though, and this has certainly happened since the beginning of the Ukraine crisis. The interesting thing here is that most of this contracting activity is with Asian companies, Korean utilities, Chinese utilities, with Japanese buyers, rather than from Europe itself. Only these two LNG contracts, Engie and more recently with Poland, are with dedicated European buyers. So again, what we're seeing is that Asia is trying to escape the spot markets, trying to escape the volatile spot markets by going to long-term contracts indexed to Henry Hub prices, rather than seeing lots of new demand emerging from Europe during the crisis. Now, speaking of prices, what are we seeing in terms of prices in the United States? Well, certainly springtime gas prices, Henry Hub prices, are at their highest level in well over a decade. And what is driving higher prices, in addition to a couple factors like slow production growth in the US after COVID and a cold spring this year, we're seeing that exports, basically the fact that our LNG terminals are running at full capacity, new capacity is coming online at new terminals and from existing terminals that have been expanded. Exports are now driving high prices in the US. That is essentially a sign that the US is now exporting more and more gas and is importing higher prices and price volatility as a result. And if this continues, I think we can see that high gas prices for the US will turn into high LNG prices, which could erode some of the advantage that the US has had traditionally. Okay, just to recap what's going on in the US, we've seen a huge boom in shipments of LNG to Europe during the Ukraine crisis, but it's prices rather than politics that have directed the traffic. The US is, there's talk of a 15 BCM target for this year, additional gas to Europe. We're going to probably blow through that by July or August. And for the full year, a 50 BCM increase is within reach just based on transactions between willing buyers and sellers without new infrastructure, without new agreements. Europe is essentially asking the US for cheaper LNG, not just a supply boost. And that's an important point because really what's going on here is that everybody in the world right now is responding to high prices and looking for a way of getting out of the spot market. And the last point is that growing exports in the US have linked the domestic gas market to international volatility. Okay, so it's come to me to sort of provide some closing thoughts or a recap for the whole presentation. Overall, the Ukraine crisis has boosted global LNG prices. It's increased volatility. It's increased insecurity of supply of LNG. We've seen that in Asia with cargoes being turned away or basically traders not delivering their cargoes to places like Pakistan and Bangladesh. It has increased the sense of unreliability and volatility in the global LNG market. In Asia, high prices and unreliable supplies are weakening demand growth, and in some cases that demand growth destruction may be permanent. Europe, for its part, has lots of gas infrastructure, but a lot of it is in the wrong place. And that's in part because infrastructure planning has been left to vested interests, to companies that make money from building infrastructure rather than making money from building infrastructure where it's needed or useful. The last thing for Europe is that total gas demand is slated to fall as a result of high prices and the REPowerEU efforts. EU LNG demand may be rising, but that LNG demand may not be a permanent increase. And lastly, the US is now exporting more and more natural gas in the form of LNG and is importing higher gas prices as a result. So I think we can turn to Q&A now, if that makes sense.
Great. Thank you all so much for those excellent presentations. We do have a few questions in the chat. The first one I think is particularly interesting, just about the role of gas as a transition fuel as it has been pitched to developing nations. And I saw Arjun post an answer here, but I just want to address this briefly to say that yes, LNG has been pitched in developing countries as a transition fuel. I would dispute that to some extent. You know, methane is the main component of natural gas, has a global warming potential of roughly 80 times that of carbon dioxide over a 20-year period. We've seen time and time again the international scientific community say unequivocally that the world has to reduce reliance on all fossil fuels in order to meet global climate targets. That said, it's certainly being pitched as a transition fuel in emerging Asian countries, but the ultimate determining factor of demand for LNG in developing Asia is going to be affordability. And so we've seen really that the recent Russia-Ukraine crisis really undermine the promotion of LNG as an affordable transition fuel, first and foremost. And as a result of that kind of lack of affordability, again, we could start to see more permanent shifts away from demand in emerging Asia. There's another question here on the timing of LNG facilities. With more LNG capacity coming online in Qatar and US by 2026, 27, is that going to relieve pressure on prices? Will most of that capacity go to Asia? I think, Clark, you touched on this a little bit. Do you have any thoughts there?
I'm sure the other panelists do as well. There's a risk that when Qatar comes online with the major new supplies, in conjunction with weak demand in the short term from Asia and with Europe, also seeking to reduce its gas consumption, that we may see a price collapse. We don't know what's going to happen. There is a risk there. I think that Qatar is sort of an example of the kind of volatility we may see in the markets. It's one of the reasons that U.S. investors have been so skittish about putting money into new terminals, because, well, frankly, in 2019 and 2020, a lot of these U.S. terminals were, U.S. LNG shipments to most of the world were losing money. And during the 2020 COVID crisis, a lot of these brand new terminals were essentially off. They were not running during the summer because the capacity wasn't needed. So the risk here that a lot of these new developments in Qatar and elsewhere are creating for the rest of the market is, again, volatility. Hard to know what's going to happen in the long run, but there is this risk that we are going to be oversupplying the market in a few years, and that's one of the things that's holding investors back.
And from the demand side, there's also a risk of building too many LNG terminals that maybe we won't need in the future. That's, for example, we see there's a lot of LNG terminals in Turkey. Now there are talks with Turkey that if they could import, and there's spare capacity in Turkey, if they can import more LNG and if they get agreements to be able to send that gas to that part of the European countries around Turkey. So that's when I suggest that perhaps the planning is important, because let's see the ones that are available right now, because maybe they will be building some, but the demand won't be there essentially in 5 years' time, for example.
I'm seeing two questions that I think I can kind of mold into one. What are futures market reflecting for LNG? Would this tempt developers to invest in new infrastructure? And then the similar question, are there signs that investors are shifting their capital in support of new LNG? Futures, I can tell you for Asia, JKM and TTF remain above $20 well into 2023 and into 2024. We are seeing some signs that new supply infrastructure, particularly in the US, are trying to rush in and capture these higher prices. But a lot of it still depends. We're still seeing some hesitation from the financing side of it, due to this kind of unwillingness, at least from Europe, some hesitation in Japan to sign long-term contracts that would guarantee offtake from these liquefaction facilities. Clark, did you have anything you wanted to add?
Yeah,
there?
so this raises the point about Qatar. We have high prices for the short term, but until let's say new US facilities can come online, that's not going to be until 2025, maybe 2026. By about 2027, we start seeing prices, the long-term JKM price, that's the Japanese Korea marker, the sort of the LNG marker for Asia. We see that coming back down to the $8-9 level. And so the long-term price projections from the futures markets are not as bullish as the short term. That's put it that way. Now that said, there's these futures prices have been all over the map for the past few years. We've been down at 2, we've been up at 30 or 40. And the futures price right now doesn't necessarily mean very much about the price it's going to be in the future. The other thing about these futures contracts is they're often thinly traded. And so it may not be very easy for, let's say, an LNG seller to lock in long-term contracts through the futures market. You can't sort of use the futures market as your hedging mechanism to guarantee future prices. It's more expensive, and the contracts just aren't high enough volume.
Yeah, and then in Europe, we are seeing some investment in import infrastructure, Arjun and Anna, but we're seeing still a hesitation to sign the type of contracts that Qatar and the US are really looking for. Is that right?
Well, certainly in Europe we are, but maybe
yeah. Well, I was just going to bring that back to the point that Anna Maria was making earlier, which is that Europe is really focused now on reducing gas demand, significantly by 2030. We're talking about 30% reduction in overall demand by 2030. And Europe, of course, is committed to net zero emissions by 2050. So I think, that's obviously playing behind this hesitation to commit to long-term supply contracts. I also if I could just make a general point from a kind of investor perspective. I mean, these terminals are multi-decade investments. So there has been talk now, in Germany, there's this plan of, okay, we'll bring in some floated, some FSRUs and to fix some additional short-term supply, and maybe build another LNG terminal. But this is not, in Germany, they've been trying to build 3 LNG terminals for the last few years, and they all failed because they weren't able to secure the investment and the capacity. So that's all there in the background.
Arjun, I want to turn back to you. There's a question about ENSOG. Who really provides oversight there? Is there anyone that can kind of rein in that build? And Anna, you talked about more kind of coordination, more planning.
Sure.
Who would be responsible?
So there are national regulators, and then there is also a central European regulator called ACER. It's like a central association of all the national regulators. But really, these regulators have lacked resources, they've lacked teeth, they've lacked powers, they've lacked the ability to challenge decision-making by ENSOG. It's improved slightly in the last few years, but still very much this is a kind of an area that's up for grabs. I think we feel that ENSOG still have far too much say in what's being proposed and what gets built.
If I add something here, when we did the study of Spain, we got into the detail of the formula that the way they were remunerated, that Enagas was remunerated for the gas. We analyzed it in detail, and we found out that the formula itself has something that says the more you invest, the more money you get, the more revenues you get. So it's already in their formula that the more investments they do, they're going to get more income. The tariffs could be higher. So that is when we think that is a desperation for building, because already it's stipulated that they will be earning more money. And it's not only happening in Spain. That is the way that the regulatory system works, So it's happening in other parts of Europe too.
I think there's a great question that was sent to us directly. a question on everyone's mind, I think, is what's happening with U.S. gas production? Is it going to ramp up to meet this kind of export demand? Clark.
Well, one of the dirty secrets of the fracking boom was that it was a financial bust. The U.S. fracking industry was consistently spending more money drilling, buying new land, buying access to underground reserves than it was generating by selling oil and gas. And the reason was kind of simple, that we were producing so much gas, there was no outlet to the rest of the world, that our markets were glutted and prices remained low. So even though we were producing a lot of gas, these companies were burning through cash, right? So what we're seeing right now is that gas companies, gas drillers, gas producers are all, especially the publicly traded ones, are all receiving a lot of pressure from investors to hold back. Don't drill so much right now. You know, they've seen this movie many times before, where prices would rise and they'd overproduce and prices would fall and they'd lose money. So there's a lot of investor pressure right now for at least the publicly traded companies to hold back, not produce so much. So it's hard to know what's going to happen over the long haul, but you know, it's not so much that I do expect gas production to continue to increase, but that's not the question. The real question is it going to increase fast enough to bring prices back down? And I think that the answer probably there is, you know, based on what we've seen from investors and the behavior of the big gas producers so far, is the answer is no, that they are perfectly comfortable with prices remaining high, keeping drilling in check, and you know, that's, you know, they are facing volatility too. If they're sort of like basically respond to these $8 gas prices now, you know, who knows how long those will last. So so a way of saying I expect gas production to increase, but I don't necessarily know if we can predict for sure that will bring prices back down.
Excellent. And then I think we've just got time for one more question as we come up to the top of the hour. I have a question that was messaged to me directly about, you know, what about new importers in Asia? This question asked specifically about the Philippines, but it's true that we have new importers that are expected to enter the market. Vietnam and the Philippines are expected to come in this year or early next. This could be, you know, in my view, is a very bad time for developing countries in Asia to be entering the market, given high prices, given volatility. At least my view on the Philippines is we've still seen very we still have very limited understanding of how they intend to procure LNG. You know, and I think this points to a bigger point. We are certainly seeing some demand destruction in Asia, but the bigger problem for the LNG industry may be the lack of demand creation amongst importers that don't currently import LNG, but are hoping to. And so Philippines is a good example. Vietnam is a good example. Sri Lanka is really a prime example of where companies, particularly US companies, are pushing LNG import facilities in the midst of the worst economic crisis in Sri Lankan history. And so, you know, it speaks to the point that policymakers and companies may be pushing LNG import infrastructure in many of these potential growth markets, but the macroeconomic instability caused by reliance on imported fuels may present a hard limit to the extent to which that demand can grow. So I think that's about time. You know, I see some unanswered questions here.
I'm wondering, sorry, I'm just wondering if we can stay online and answer questions. I mean, I don't think there's anybody who, like, you know, people should feel free to leave if they need to, but I'm happy to stay on for until all the questions are answered, really.
Oh, sure. Yeah, absolutely.
If that's okay with folks.
Fine by me, absolutely.
Okay.
Let's see. So we have a question as well. You know, this is on the US side again, Clark. What's happening to gas demand as a result? You know, Henry Hub, we've seen it almost approaching $10.
Yeah, right. So you'd expect to see a major decline in demand, but we haven't so much, and there's a couple of reasons for that. One is the cold spring we've had. We actually had more heating demand in the during the spring months than we have in previous years. So that has kept prices high and demand a little bit higher than otherwise would be. The other thing is that, you know, there's a lot of talk about, oh, well, gas prices get more expensive, you know, generators will switch back to coal. So far, we haven't seen that. We haven't seen a big boost or a big boom in coal-fired power, even with high gas prices. And there are reasons for that. One is that coal prices are getting higher too. So it's kind of like a 6 of one, half dozen of the other. Like, with coal prices higher, like it's basically, the effect you might expect to see is sort of overall demand reduction rather than a fuel switching. The other thing, and this is related to the price, the fact that coal prices are high, is that we're not seeing the ability of the coal companies themselves to ramp up production quickly. A lot of these companies basically, they've been on maintenance mode for a long time. They have not put in money for new capital projects to boost production. So they're sort of on the glide path down, and they don't necessarily want to add a huge amount of new production when demand is so fickle and unstable.
I think this is another interesting question. Our investors, we've touched on it a little bit. Clark, you mentioned, longer term when new supply prices may fall back down, but are investors worried about Russia, the potential of Russian supply to come back onto the market after the war ends? This isn't something I've really heard in the conversation.
Well, my sense is that, my sense may not matter, I'll put it that way, but my sense is that Europe appears to understand that it has a Russia problem, that it is not thinking, oh, short term we're going to get off Russian gas, but if the conflict goes away, we'll just go right back on. I think that there's been a sea change in the attitude in Europe, and Arjun may be able to, or Anna Maria may be able to fact check me on this one, that they are really serious right now, or at least the rhetoric is serious about getting off of Russian gas over the long haul. So what that means really is that to the extent that Russian gas production is likely to fall, oil production is already down. We're seeing, let's say, that, some of the big Arctic LNG projects, they're grinding to a halt because of sanctions, because the super majors have pulled out. Even one Chinese yard has pulled out of construction of equipment for one of the Russian LNG plants. But what we're likely to see is Russia reorient towards China, towards Asia, try to get more gas supplies by pipeline there. That could in turn undermine, say, China's demand for LNG in the future. Do I expect to see Russian gas go straight back to Europe? No. But do I expect to see some realignments, including reductions in Russian gas production, but also a greater shift from Europe to China and to the rest of Asia? Yeah, I expect to see that as well.
Yeah. Arjun, did you have anything you wanted to add?
No, not really. That's yeah.
Okay. I've been asked a lot before about the realignment of Russian commodities to Asia, and the thing is that the Russian export infrastructure has been set up to go to Europe, right? A lot of it is concentrated in the western part of Siberia, with the exception of Sakhalin 2. But simply saying we're going to pivot to Asia is not really viable in the near term. We may see some kind of opportunistic purchases of Russian supplies. We are seeing that kind of from India and elsewhere, but to the extent that this is a reliable long-term solution seems to me to be very questionable, especially when one party can demand payment in another, in a completely different currency than what the contract may indicate. It doesn't seem like a reliable source. So anyways, let's see. We have one final question here. FERC, what is the advocacy community saying to FERC regarding the approval of new pipelines and LNG terminals? Is FERC still saying LNG is clean relative to EU coal and Russian gas? So
FERC, for our European attendees or Asian attendees, that's the U.S. Federal Energy Regulatory Commission. There is, I think, an increasing sort of, I guess, drumbeat for, and this is less from the environmental advocates and more from consumer advocates, including the industrial consumers of energy, to basically get FERC to rethink the idea that LNG exports are always in the public interest. I mean, so basically, in order to get a non-free trade agreement, essentially authorization to ship LNG around the world, you need FERC's approval, but FERC has based its approval of LNG terminals on the idea that, well, I mean, essentially an LNG company wants to do it, so therefore it's in the public interest. So there's been a big push among consumer advocates for a rethink of what the public interest means in the context of LNG. Because, you know, during the first part of the fracking boom, there was so much gas produced, and there's such a glut that, you know, exports didn't really seem to matter to prices. It's clear that that era is over, at least over for the moment. And, you know, more exports means higher prices for the US. We are exporting our gas, we're importing higher prices, we're importing volatility and instability into the US gas system. And so, you know, I think it's, you know, it's important work to be doing that, to getting it, but I don't see any sign that FERC is actually incorporating that thinking. I think right now there's just a, you know, the response from DC, from the White House, is generally crisis mode thinking, that we have to help our European allies, we have to get more gas into the global markets, and we have to do that as soon as possible, even though, you know, that's not a short-term proposition. It just can't happen overnight. It can't flip a switch and increase your LNG exports. But that thinking, we must help with the European crisis, I think dominates you know, the thinking at FERC, is my sense.
Excellent. So I think we're going to have to stop there. You know, again, a huge thank you to all of our guests for signing on, and even bigger thanks for hanging around as we get past the hour. But much appreciated. If you have any remaining questions, please feel free to email us directly, and we'll be happy to answer. So thank you again. Have a good rest of the week. Bye all.